Hello ladies and gentlemen, this is Nathan from MyCryptoParadise, and in this video we will look at one of the most complicated indicators at the first glance, which is Ichimoku Cloud. We will go through the structure of this indicator, showing what each line does and represents. We will go through bullish scenarios as well as bearish scenarios. We will look into the tools to understand when the trend is on. And finally, we will present a trading strategy based on the Ichimoku Cloud with an example of a buy signal as well as the sell signal. So if you are excited, grab your drink and let's get started. At the first glance, Ichimoku Cloud Indicator does look like this. It's a lot of lines which does look extremely messy. Some novice traders might just ignore this indicator, but it really does help in trading if you know how to use it. And by looking at these lines, we can see that there is a lot of mess, nothing is clear, and this is because of two reasons. First, we need to structure the indicator to understand what each line means, and second, we can clearly see this is a trend indicator. It does not work in the ranging market. Now, as we have some structure on the indicator, let's go through each of the lines within the Ichimoku Cloud. The most important is the cloud itself. It can be either green or red. As a rule, traders do not take the trade once the price is within the cloud. So this is no go for either selling or a buying opportunity. But once the price is above the cloud, as in this scenario, and the cloud is green, this is a buying opportunity which is presented. As you can see, there is a green line and the red line. The green line called conversion line, while the red line called the baseline. We would not go into the complicated formulas of these lines, but what they are is an average of an average. So these are moving averages which are based on the calculation of the average price of each candle. Obviously, they are different period and they have different formulas than the regular moving averages. Now, the final line is the lagging span, which is in white. In essence, this is simply the price which is lagging by 26 bars. So if we remove other lines, we can clearly see that this is simply a replication of the price, which is placed by 26 bars back as per default settings. We all know that most of the time price is ranging or consolidating, and Ichimoku Cloud help us to see where this range trading is going on. As an example, we can see that it's crossing above and below the Ichimoku Cloud, which means that the price is ranging. But let's have a look at the scenarios when the price is trending. Now, right there, you can see Bitcoin remained above the Ichimoku Cloud all the time. And as soon as it crossed below the Ichimoku Cloud, the range trading has started. But as long as price remains above the Ichimoku Cloud, the buying opportunities will continue to be presented. And another point to consider is the change in color of the Ichimoku Cloud. And as long as it's green, obviously, this is an uptrend. So we can see that there was some change in color right there, indicating the first bearish signs. So this is the time to start being cautious. In example of a downtrend, we can see yet again how the price remains below the Ichimoku Cloud. The trend is clearly very bearish. We saw the first indication that this might be the end of the downtrend. And in fact, after a strong yet the final wave down, price has started to consolidate, warning of the potential trend reversal. The conversion line along with the baseline are used in a similar fashion. As long as the conversion line is above the baseline, this is an uptrend, as we can see in example on this chart. And the first bearish signal could be the break and close below the baseline. So the baseline should be watched very carefully for the breakout, as this might be signal that the trend is ending and the price is likely to go down or initiate some sort of a range trading. Now, this is the bearish case with the conversion and the baseline. The conversion line crossed below the baseline, indicating the beginning of the downtrend. We can see how long the conversion line stayed below the baseline, and this was all the downtrend. So yet another example to see when the market is trending. Finally, we have a lagging span, which also can help us to determine whether there is trend or not. The simple way is to watch the clear space between the lagging span and the price. We can see that there was no price action in between the price and the lagging span. But if we move forward, we can see that between the lagging span and the price, there was a lot of price action going on. I can simply adjust it up so you can visualize what is happening, how many times price was crossing this area between the price and the lagging span. But moving forward, yet again, we can see a clear space where nothing is in between the price and the lagging span, indicating that the trend is bullish. So in combination, we need to watch all these lines to understand when the trend is emerging. And these examples show us very clearly that when the price is above the cloud, when the conversion line is above the baseline, and when the cloud is green, this is a bullish trend. The same would be applied to a bearish trend, but obviously the price must be below the cloud must be red, and the conversion must be below the baseline. Now, as we went through all the lines within the Ichimoku Cloud, it's time to look at how we can apply it in a live market, how we can trade it, and we will look at that trading strategy. By no means this is the best trading strategy, but over the long run it has shown positive results. So let's jump into it and get through all the rules. What we're looking at is that price bouncing of the Ichimoku Cloud. So this rule number one, and the price must either bounce off the Ichimoku like we had right there, or it can bounce off the Ichimoku Cloud itself within the area of the Ichimoku Cloud. The most important is that there won't be a closing price below the cloud. In this example, we had no closing price. Price spiked down, so as long as price remained above this low, we consider that closing was within the Ichimoku Cloud. And this is actually another way to use the cloud, is to watch where the price is bouncing of either the top or the bottom of the cloud, which show us where the support and resistance levels can be formed. So once we had the bounce, we are waiting for the price to produce a new higher high. So this was our previously made high, and here we had the break and close above the previous high. For us, this would be a signal to place a limit order at the baseline. The baseline, to remind you, is in red color. We can see that there is already a buy trade setup, but I want to show you live how I did these calculations. So basically we're placing the entry at the baseline. Then we're dragging our stop loss to place right at the low produced prior to the breakout. And finally, we're dragging our take profit to achieve a risk reward ratio of 2. And this is what we're getting. Risk reward of 2 is achieved. And as we can see, price went exactly towards our take profit. Now, there are some other rules to follow. In order to go for buying opportunity, the cloud must be in green when entering the buying trade. At the same time, the conversion line must be above the baseline. So in this example, all rules are met and we are good to go for the buy trade. You can see how precise the entry was with literally zero drawdown. So very precise entry, very precise exit. Now let's go through the selling opportunity, which is very similar, but just we will be looking at the price being below the cloud being red, and the conversion line is below the baseline. So what we had is price bouncing off the cloud, and the cloud was in red, also a very important factor. Then we had the break and close below the previously established low, so we are good to go to place a limit sell order at the baseline. The stop loss is placed right at this high. The take profit is placed so to achieve the risk reward ratio of 2. Yet again, this was a very precise entry with literally zero drawdown. And we had a very good exit as well. Price went slightly lower, but still it was nearly a perfect trade setup. You might also ask, where is the lagging span indicator? Because right now it is turned off. So if we put it back on, we can also use it as a filter. So if the price is below the cloud, the lagging span also must be below the cloud. But from my personal experience, too many lines, it's just harder to follow, and to simplify that, I have removed the lagging span. Obviously, it is up to you how to use it or whether to use it. But in my understanding, in order to trade successfully, the trading symbol must be simple and easy to understand. Less lines, less problems. And that was all for today, ladies and gentlemen. Don't forget to take it easy and smooth, and see you next time.